It's all gonna go down. It's all gonna go down. What's up, guys? It's Adam J with TKT. I haven't been publishing here on TradingView for quite some years now. I've been putting in a lot of self-work and overall strategy work. Things have been very defined since probably year 2 for me, but year 2 was when I was trading patterns, and patterns are cool, but as I say in some of my videos, they only work when you know why they are forming or why they are happening. But today, this evening, I want to bring some caution to the trading industry and the trading markets, as I can't help but feeling compelled to post this because I know a lot of people do have exposure to, ETFs and direct stock. And just looking at this monthly time frame, we could clearly see, a hanging man that closed within our prior month. I mean, the top side closed within the prior month. Excuse any background noise. Like I said, I just felt compelled to do this. If it gets some views, fantastic. If not, fantastic. That's okay. Excuse the coughing as well. So from here, one thing that I would speculate on is this triple bottom, the ascending lows that we had here. But overall, what we could see is we're so far extended from this trend line, and the market has not accepted any higher pricing above 26,000. So I mean that's there. We're currently only trading 300 points away from it. People may want to look at the lower time frames and maybe identify. I think there's like some gap here or something. Yes, there's a gap right here at 25,944. But as you can see, on a higher time frame, we rejected. For me, this was profit taking up here at this high, and we do have a lower high on these two candles. Plus, that hanging man gives us a very, very strong indication that this market's ready to come down. Simultaneously, we have the VIX, VIX, which is a barometer of the overall macro sentiment in the market, and this really gives us a true gauge of what's happening right across the board. We can see that the VIX has been hugging the lows. That's typically a sign of a bullish market, and we've been hugging the lows now for quite some time. We had this big expansion up recently. That was in April of 25. We had these two expansions. They weren't anything significant. The reaction to these expansions on the VIX was really only about a 2 to 4% retracement on the indices. For me, that's not even a pullback, right? We haven't even seen any type of major correction on the indices in years, and the indices are due for a correction. When that'll happen, I'm not sure, but all I'm telling you guys is if you look at the monthly candle on ES, if you look at the monthly candle on NASDAQ, both of them have a clear hanging man. That's all you need to know. From here, we can honestly delete all these drawings, and then what I would be looking at are two simple points of data, which is this monthly closure, the body below it, and then I'm looking for this body right here where we have two equal closures, and then we'll draw the equal highs here, and that's the framework, right? That's it. What is going to happen from here? That's the only thing that matters. Either we're going to play here, we're going to break down low, and then we're going to just start doing this, right? And back into fair value, 21,000. This is not a fair value gap. It's fair value, fair market value. Everything has an intrinsic value and a true value. When the intrinsic value is overvalued or over-speculated on, you get retracements. When it's heavily over-speculated on, you get severe crashes. So I'm not saying this is even if this pulls back down to 20,000, 21,000, it's only a 16% retracement, which is fine. That's healthy. It's normal. If we zoom out on this chart, this is the problem. Right? And this is only from 2020. So that's what I've got for you guys. Best of luck out there in the markets. Stay safe. We will see you soon. TKT, Adam J, out.